And we're live. Hi again. In this today's stream, we are talking with a very special guest from TrendSpider, who's going to be showing us how to use some very nice tools to analyze the market and get that edge you need to make more profits, right? And we're also going to be having a special discount code. We'll reveal that later on the stream. So stay tuned for all that. But first, a few special words from our partners.
PrimeXPT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXPT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Ferrum. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI. All right, and we're back.
Hey,
I'm Crypto Penguin, joined by my co-host Crypto Herc, and our guest today is Jake from TrendSpider. Hello there, Jake.
Hey, thank you guys for having me.
For those who don't know, could you just give us a short introduction? Okay, what exactly is TrendSpider? What do you offer? And then what are you going to show us here today?
Yep. So TrendSpider is a technical analysis platform kind of at the heart of the product, but we also offer different things such as seasonality on the crypto side. Now on the stock side of things, we have other things that look at, insider transactions, things like that, analyst ratings, things that you don't really see in crypto. But the whole point of the platform is to make the whole process of technical analysis more efficient using different proprietary features on the platform, such as the raindrops that we'll be going over today, such as seasonality that I touched on with, which is really interesting with crypto. Crypto is a very seasonal sector, if you will. And on top of that, just going through how you can backtest different strategies, that type of thing, using our strategy tester. So really, it's just an all-in-one tool, both for the technical side, but also non-traditional technical things like seasonality and fundamentals for those stock traders.
Awesome. And tell us a few words about TrendSpider. How long it's been in the market, and how you decided actually to start building TrendSpider.
Yep. So TrendSpider has been around since March of 2018. We pretty much came out with a beta product to market at that point. It was definitely something that was, built, but something that is not the same as it is today. I came on as a founding member right when we went to market. So the way TrendSpider started was my partner and our founder and CEO, Dan, he was drawing trend lines one day and said, this is a very repetitive process. How can I automate this? And so that's kind of how the whole project started, was just simply trying to automate trend lines and keep things consistent across any chart you were looking at. And so that's kind of what we started with when I came on board. And then from there, I was able to help with kind of the vision of the product and the direction and kind of really focusing on what the market wanted. And so it's just been a great journey on seeing the product grow, but also seeing other people start to use some of our features and really get an edge in the market by seeing the market in a different light, in a different perspective, through these different proprietary features, as well as just the ability to make your whole technical analysis process more efficient and just less biased.
Okay. Got it. And definitely seasonality, especially, it's something that I would love to learn about, because to say that, to be honest, it's a term that seasonality is a bit of controversial in the markets, right? Some people believe in it, some people don't believe in it at all. I guess, TrendSpider, since it has this feature, you believe a lot in it. So what your thoughts behind for the people? What would you say to the people that don't believe in seasonality?
Well, seasonality is definitely something that can be pretty arbitrary if you use it that way. So for example, you want to start seasonal trends from a benchmark, right? You don't want to just say, what's the seasonality since Bitcoin started? Because there's been a lot of cycles within Bitcoin or through the stock market or anything like that. So for example, one thing that I like to do on the seasonal side of things, using the week of the day, for example, we're looking at each day of the week and we're saying, excuse me, I said that wrong, day of the week. We're looking at each day of the week and we're essentially saying, what is the win rate for Monday since the start of 2021? So you want to create this anchor for seasonality where, a benchmark where what is the seasonality since the beginning of the year? What is the seasonality of each hour of the day since the start of May? So, if you just went back and said, what's the seasonality since some random point in time? Yeah, that definitely doesn't hold a lot of weight. But if you start at a benchmark, you can go in and you can say, well, since the start of this year, Saturday has the highest win rate with a 67% win rate, meaning that every Saturday has a 67% win rate versus Friday's close. So that means Saturday closes 67% of the time higher than Friday's close. So you really have to have a benchmark to go off of, and really in order to kind of have any type of logic behind it. Because a lot of people are like, yeah, the seasonality of Monday since Bitcoin was created is this. Well, how many times has Bitcoin gone up and down through cycles? You want to kind of do it from this time frame, or since maybe the COVID lows, since the bull market started. What is the seasonality during this uptrend? So that's something that I think a lot of people don't really think about, and that's how you have to really kind of define seasonality as something with a benchmark.
So by seasonality, you don't mean like winter, spring, summer, fall. You mean like kind of like long-term trends and patterns, the way the market behaves.
Could be that. Could be. So we have 4 different types of seasonality, and I can kind of go through that real quick. So let's say that we're looking at seasonality for Ethereum, right? I can kind of make my screen bigger here. And so there's different ways you can look at seasonality. So for example, here, I'm looking at the day of the week. So you can see Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. They're all here on the bar chart here. But what you can see is you can see that you can change this. You can exclude certain dates. So another thing that you can do, you can add these different variables here that kind of show you a different view on this. So for example, let's say that you simply want to see what is the most
I hope nothing broke.
No, it's just my mic came loose. 1 second. So yeah, I mean, it's one of those things where you essentially can look at not just the win rate, but you can also look at there we go. You can also look at the volatility for a particular day, or you can look at the volatility for a particular month. So in this case, what I'm looking at, can you guys see this blue cloud on the graph?
Mm-hmm. Yeah.
So you can see here, this is Saturday, right? So Saturday, over the last 5.5 months or so, pretty much since 2021, the biggest move on a Saturday for Ethereum has been 26% in one day. The biggest move to the downside on a Saturday for Ethereum has been negative 4.79%. So you can start seeing each day what is the range at which Ethereum has traded since the beginning of the year. For example, Wednesday has been the lowest move down. So you can see here on Wednesday for Ethereum, at some point this year, on a Wednesday, Ethereum went down almost 20%. So this cloud will show you, what day has the most volatility over the last, since the beginning of the year. You can see on Thursday, this cloud is pretty narrow, right? So we know that Thursdays have a pretty narrow range at which they trade in. The biggest move on a Thursday has been 11%. The lowest move on a Thursday has been negative 5%. Where you compare that to a Saturday, you can see the range has been negative 4.8 to 26%. So this allows you to get an idea. Is there a particular day of the week that has a more wild range? And Saturday makes sense. The weekends are pretty active for crypto. So you can just see this in a visual perspective. But as I mentioned, you can see this from any time. So let's say that you want to look at maybe how has, it's hard to say how has each month of the year played out since the COVID lows, because we're only a year into it. You can't really use just one data point. But what you can do is you could go, since let's say May of 2016, how does each month perform? You can see that March has a 100% win rate. So over the last 5 years, there has not been one March that closes red in Ethereum. So you can look at March and you can compare that with the technicals, and you can say, well, the chart is looking prime, and we're going into March, which has a very high seasonality. Now, if you're looking at Ethereum right now, we're kind of possibly at a blow off top right now. You've got a lot of people changing their sentiment in crypto, but not only that, but going back since pretty much exactly 5 years, you can see that June has the lowest win rate for Ethereum. So it only has a 20% win rate. That means that 20% of the time, June closes green versus May's close. Also known as 80% of the time, June closes lower than May's close. So being able to look at this and compare the chart with this non-technical seasonality really allows you to see some interesting things. And back to the cloud, right? You can see that April over the last 5 years, May, there's not a lot of volatility here. The biggest move up has been about 22%. The biggest move down has been about 22%. You look at February, the biggest move in February over the last 5 years has been negative 53%. And the biggest move to the upside in February over the last 5 years has been 223%. So you can start getting an idea of, which month of the year maybe is a little more stable, or which month of the year is a lot more volatile. In this case, you can see February has a very big range at which it's traded at over the last 5 years. So it's a really cool tool to be able to just compare something that's really non-technical with your technical charts as well.
It looks like it's actually a great way to, if you're a full-time trader, you can plan your vacations. Right? Okay, I only trade Ethereum. When is there volatility there in the market for me most of the time that I can make some profit? Because a lot of the time, you go in the market, it's not volatile. It's hard to make profit, right? So you can say, okay, maybe that those few months where it's highly volatile, I'm going to be at my desk 24/7. And then those months where it's going to be less volatile, maybe I'll just stick it into some safe farming stake or something or whatever, and then I'll go enjoy my profits.
Yeah, no, that's pretty much exactly how to look at it. And this is something that goes on crypto. I mean, I'm not sure if there's a ton of stock traders on here, but I mean, this works on any market. So one thing that I've found interesting, and sorry to pull in the stock market in here, but this is really interesting. So,
no, and that was a question I wanted to ask you, if you are crypto focused or you're covering other markets as well, because we might have people that are watching that are totally beginners, so they don't know this tool. And in our community, we also have a Forex section, so definitely.
You can use it on Forex. You can use it on stocks. You can use it on crypto. I personally am more on the stock trading side of things. It's just been something I focus on. And, a lot of people say, well, why don't you trade crypto? And my answer to this is my analogies to the market are always something with a casino, right? So let's say that you've been going to the casino for the last 10 years of your life and blackjack is your game. It's really hard for you to just go and play poker if you've never played poker before. Now, there's similarities, you have statistics and things that you still have to use in both, but the games are completely different. So for me personally, I've been trading stocks long enough where I'm comfortable trading stocks. And crypto is something that I have attempted to trade. I don't do well with 24/7 markets. Now, a lot of people use bots, and that's a great way to battle that, that overnight kind of crazy swings. But for me, I've focused on the equity market But I love to analyze crypto. I love to provide content for people on Twitter who are, in crypto and wanting to get a different perspective. And honestly, that's why I like doing it, because it's really a lot easier to give your perspective on something when you don't have an emotional connection to it. I don't have any positions in crypto, so I don't have a bias. I can just see it how it is. I think Ethereum's probably going to 5K if we can get through about 4,400. That's not because I'm in it. It's just because that's where I think it's going to go based on the chart. So that's something that I kind of do enjoy. Just not. It's kind of like lumber, right? Like I like looking at random markets, lumber prices. Just because lumber's going up doesn't mean I'm going to buy it. I still like looking at it, and I like to look at the huge parabolic move it's had, but that doesn't mean I'm going to go trade it. And so one thing about trading is you really have to hone in on what you know and what you're comfortable trading. And so that's why I personally stick to the market, but I have a ton of friends. A lot of people at TrendSpider do trade crypto. They do a bunch of farming and staking and all that. But it's just never been my thing. And it's just one of those things that I never really got into, but I do love to analyze it. So one thing I did want to show on the VIX. So for those that are trading the markets, the VIX is something that has very, very interesting seasonality. So one thing that I've been looking at, this is kind of comparing the technical side of things with the chart. So obviously we just had the COVID crash. The VIX absolutely spiked like crazy. And then you can see here in 2008, we had a very similar move, just a huge spike to the upside during the financial crisis. And what's really interesting is notice how the VIX melted pretty much down exactly in both of these instances. Now, what's interesting is they both came down right to this around $15 level before reversing. So what's really interesting here is not only can you look at the chart and say, well, this 2020 chart is looking pretty similar to this 2008 chart, but you can also look at the seasonality for the VIX. So what you can do here is you can look at the VIX and you can pretty much see that, May has a 20% win rate. So right now, this is a month that is kind of up instead of down. So a 20% win rate, as I mentioned, means only 20% of the time VIX is closing green versus April. At this point, I would be shocked to see the VIX close red with it being up so much, but who knows? CPI data came out, and that's probably why we're getting a spike in VIX. But on top of that, not only do we have the same exact pattern, and it's pretty much around the same exact time of year when we saw it back in 2010 and now in 2020, but you can see June has a huge spike over the last 5 years. So, people may be asking, well, why are you looking at seasonality over the last 5 years? What's the significance of that? Well, if you go to the SPY and you look at the monthly chart, one thing that I like to do, and this is kind of what I mentioned before, is looking at a benchmark, right? So, for example, here, back in 2014 all the way to 2016, we were in this really weird state of the market. The oil crisis was happening. Crazy stuff in China was going on. China market was crashing. So we pretty much didn't go anywhere for about 2 years. Finally, we bottomed out in the beginning of 2016, and that's what really started this next trend to the upside. And so what I want to do is I want to look at pretty much since this trend reversed and we continued to make new highs after this 2-year weird kind of stall in the market. I want to know, since we bottomed, what is the seasonality? Because this is when I would consider us being kind of in this continued uptrend. We keep hitting higher highs, even though we've had some crazy weird moves with COVID and the 2018 crash, we're still hitting higher highs. We haven't really stalled here. Like we did here, we didn't really hit higher highs for about 2 years. Even though we had these mega crashes, we were still hitting higher highs. So to me, the trend is still intact. So that's why I want to look back 5 years and I want to say, okay, how has the VIX performed since we bottomed on this longer term trend? And you can't really do that since 2018 because you're only going to have about 3 years of data. And, that's a little small of a sample size. And 5 isn't a huge sample size either, but at least you have an idea that's where the trend changed. You have 5 years of data. And so you can really kind of get an idea how the seasonality has looked since we reversed and continued to the upside. So as I mentioned, seasonality, you really have to find a benchmark. You can't just say, what's the seasonality since, February of 2017? Well, we had already started a bull market here for a new bull market for a year. So, it's something that you do have to look and say, okay, we bottomed out in early 2016. I want to start my seasonality since that point in time. So that's how you can use seasonality from a technical perspective and kind of anchor those different points and look at it that way. So that's the VIX versus, that's why I chose that seasonality on the VIX. And you can see here, we'll have to see if we get that same type of move, because VIX literally went from 15 all the way up to 47 in 2010. Now remember, the high was in 2008, but we melted down for about a year and a half. Same thing here. We've melted down for about a year now, a little over that, and now we're getting that spike again. So definitely something to consider when you are looking at the market. Crypto, Forex is a good example of this. So if you go to like Euro USD and you want to look at the FX side of things, this is something that was pretty interesting. Hold on, I don't really do Forex a lot. I was talking to someone that was looking at the Forex charts not too long ago. Let's see here. So yeah, that trend line isn't there anymore. I think it was this trend line right here. Oops.
And one question, I don't know, maybe it's a stupid question, but do you take into consideration events that are happening in the world? For example, let's say the US elections.
Yeah, you can do that. Yep. So are you talking about seasonality?
Yeah.
Yeah, no, that is actually a great point, because I was going to bring that up and just completely kind of went off the radar. So what you can do is you can add filters. So you can exclude different years. So let's say that you want to only look at seasonality for the VIX during election years. You just go and you exclude all of the non-election years. And so if you go and you look at, let's see here. Let's see if I can pull it up. I think it's going to take forever to put those in. So I think I have the list of non-election years already up here. Let me just find it. But yeah, you can go in and you can pretty much filter out any non-election year. And let's see, do we have it? No.
At least I'm glad the question was not stupid.
No, not at all. There's no such thing as a stupid question. Unfortunately, for some reason, I don't have it. But I can't remember I think 2000 was an election year. So pretty much you would just exclude all of the non-election years. I can't do it off the top of my head, but we are going to get to the point where you won't even have to go and type in the non-election years. We'll have like a filter where it says exclude non-election years. And what was really interesting for the VIX in October was, it doesn't show here because we're only looking back since 2016. But if you're looking back pretty much since 1990 and you excluded the non-election years, October has a 100% win rate for VIX. So as a trader, I was looking at that, and I went into October, kind of like what you guys were talking about. I just said, nah, I'm just not going to trade during the month of October. There's too much volatility. And honestly, it was one of the best moves I made for that year, because so many people got chopped up because, volatility, everybody loves volatility, but volatility also suggests that the charts don't always work like you'd think. It's kind of like playing blackjack, right? It's like, oh, I'm holding a 19 and the dealer has a 14. I'm definitely going to win this hand. And then he pulls out a 7. And so it's the same thing. These beautiful setups happen during volatile times, and then they just break down. So that's why I like to only trade when there's an edge in the market. Sure, there's volatility, but the patterns that I'm generally trading are not working like they usually would in a regular stable market. So for this example, October, I just said, I'm not even going to trade. I'm just going to analyze the markets. I'm going to provide some information for those that are still trading. But me personally, I'm just going to sit on the sidelines and wait until the elections are over And it ended up being, I would have really done some damage to the account just because there's so much, just random things happening. So that is how you can use seasonality. But another thing that is really nice on the platform is the raindrop charts. And I have a pretty cool example with Ethereum here that we can go over. But before that, I want to just explain what the raindrop chart is. Have you guys ever heard of it before?
I have from Crypto Birb. Before we go into the raindrop chart, we have some questions on seasonality from the people that are watching. If I can ask you, when we are saying seasonality, do we mean the process of funds moving from large caps to mid caps?
No, it's seasonality is simply a function of the win rate. The win rate is a function of the current time frame you're looking at. Did it close higher or lower than the previous month? So when we look at, what were we just looking at? Let's go to, we'll go to VIX. Actually, here's an example right here. PLTR, for those that trade stocks. PLTR is a really interesting example that happened yesterday here. Let me just remove some of this. So if anyone's familiar with the anchored volume weighted average price, it's the ability to start your volume weighted average price from a pivot point or a change in trend. So here what I did was I created an anchored VWAP, and notice how perfectly PLTR went pretty much right into this VWAP. Now, if you go to the day of the week seasonality and you look at, since the beginning of the year, since January of 2021, what's the seasonality? These percent win rates simply mean, so for example, Wednesday, right? Well, yesterday we were moving up right into this anchored VWAP above. Pretty much everybody's getting back to break even. What happens when a lot of people get back to break even? They sell because they're like, well, I just dealt with a huge drawdown. I don't want to deal with, dealing with that drawdown again. So what happens is not only did we move right up to this technical level above, but going into Wednesday only has a 26% win rate since the beginning of 2021. So that means that only 26% of the time, Wednesday closes higher than Tuesday's close. So not only did we have the technical setup here, but we also had the seasonality. And as I mentioned, seasonality is really focused on the win rate. What is the percent win rate for a particular time frame? So as we mentioned with Bitcoin, right? Over the last 5 years, Bitcoin has closed in March higher than February's close every year since 2016. So it's not really about funds flowing in or out. It's about just the win rate of the previous period that you're looking at.
Got it. Very, very useful. At this point, let's remind to the people that are watching that we have a very special discount. Get 30% off any plan of TrendSpider, and at the same time you can get 30% to our most popular plans at the Birb Nest, and we have a 14-day free access to our community. So it's a no-brainer, guys. Okay, so let's move on, Jake. Let's go to the raindrop chart and see what it is.
Yeah, so quickly before we jump into that, I was going to mention with the 30% off, you do have a 7-day free trial, and you have one-on-one free demo access that you can get to. So if let's say that you really want to try out seasonality and you really don't know how to use the seasonality tool, you just set up a one-on-one demo with one of our customer success guys, and they're happy to walk you through any questions that you have on the platform. So it's not like, hey guys, sign up, and then it's all up to you to figure this out. We're with you every step of the way to try this out. And, there is that 30% off coupon.
There you go. What else do you want, right? 30% success managers, 30% from the Birb Nest. Okay.
All the above. So the raindrop chart is something that, just like seasonality, is a fractal tool. And what I mean by that is it can be applied to anything. It can be applied on a 10-minute chart, a daily chart. Just like seasonality, you can look at the day of the week. You can look at the month of the year. You can use it on crypto. You can use it on stocks. Forex, not so much. I guess technically you could, but Forex volume is a little wacky. So a raindrop chart really has two different layers, right? So the first layer, if you're familiar with a price bar is simply just, let's ignore these squiggly lines here. A price bar is just looking at the left bar here and the right bar. And so generally when you're looking at a price bar, your left bars are open, your right bars are closed. With the raindrop chart, your left bar is your volume weighted average price for the first half of whatever time frame you're analyzing. So let's assume this is the daily candle. What you can do is you can actually go in and you can see, what is the volume weighted average price during the first half of the day. And then the right bar is the volume weighted average price for the second half of the day. So instead of looking at the open and the close, which a lot of the time can be very arbitrary, you can go in and you can see, we're buyers in control as a function of volume weighted price, rather than just saying we're buyers in control as a function of open or close. So this really is more of a volume weighted candle rather than just looking at, your generic open, high, low, close candle. Now the low and the high of the raindrop is the same exact thing as a candle, right? You're just seeing the low and the high of the range of the day, or the 30-minute candle that you're looking at. Now, what gets really interesting here is the first layer, as I mentioned, is pretty much that bar chart. The second layer is the volume profile for the day or the 30-minute period you're looking at. So what does that mean? It means that instead of you having to go into, let's say, the 2-minute or the 5-minute chart to see where that volume came in at different increments, you can see all of that information on the daily chart. So you can see on the left-hand side here, this volume profile is really focused at the bottom of the range. What does that mean? Well, it means that a majority of the volume for the first half of the day was focused near the bottom of the range, and that is the actual volume profile showing us where that volume came in for the first half of the day. So it's not shocking to see that the volume weighted average price is kind of right in the middle of that little volume profile dome here. Now, the second half of the day, you can see here that the volume profile really took a turn, and you can see a lot of that volume started to take place at new highs during the day. How do we know that? Well, look at the left-hand side. It's flat up here. So if it's flat, we know there was no volume that took place at that area. The price action wasn't there. So we know during the second half of the day, a lot of that volume started to come in and was taking place at these higher areas. So we know that during the second half of the day, price was hitting higher highs. So how is this useful? Why is it useful? I will go into that in a second. I'll just go over the different colors really quick. The bullish raindrop is just when your volume weighted average price during the second half of the candle is higher than the first half. That is green. The neutral raindrop is essentially a volume weighted doji. So your VWAP for the first half and the second half of whatever time frame you're on, let's just assume it's the daily. That means that your VWAP on the first and second half of the day are equal, just like a doji is with your open and your close. And this is purple or blue, whatever color you want to call that. We get kind of different people on the team say it's blue. Some say it's purple. Some customers say it's blue, purple, whatever you want to call it. Let's just call it a neutral raindrop. And it means that the VWAP on the first and second half of the time frame are equal. Bearish raindrop is just when your VWAP for the second half of the candle is lower than your first half. So, sellers are definitely in control into the second half of the day or time period. And that is just a red raindrop. Now, the different ways to use raindrops are really these three different ways. To view volume flow within candlestick wicks, and this is what I'm going to show you guys in Ethereum. So this will give you an idea of, is this wick something that actually had conviction by buyers and then the price just dropped because those buyers were done buying? And raindrops really take a little bit of insight into supply and demand curves. How does the supply and demand curve move? A lot of people think prices only go up because buyers stepped in. Prices can simply go up because there's no more sellers. And if demand remains constant, price can go up simply because there's just no one selling. Same thing with prices dropping. You don't have to have a bunch of sellers step in for prices to drop. You just need that demand curve. You need those buyers to step out of the way, and the price is going to have to drop in order to find buyers. So that is important when you are using these raindrops to understand those concepts. The second way to use raindrops is viewing volume flow around resistance and support zones. And this is really kind of tying in number one, where you're using those raindrops and those candlesticks next to each other to see if you can find an interesting perspective. And I'll go over an example of that here in a second. Then the last one is looking for discrepancies between candle colors and raindrop colors. So I'm sure a lot of people use divergence in the market, looking for higher highs on price, lower lows on the RSI or something like that. Well, you can look at a raindrop and a candle. And if you see, let's say a candle is red, but a raindrop is green, that can really give you some insight into, the discrepancy there. And I'm generally giving raindrops the priority there. So if there's a green raindrop versus a red candle for the same day, I'm more focused on the green raindrop. Now, there are times where that doesn't work, and I'll go over an example of that here as well. There's nothing on the platform that's going to just be a 100% win rate. There's always going to be examples in the market, no matter what you're using, where something isn't going to work every time. That's just the probabilities of the stock market, and that's statistics that you have to use to your advantage. Now, looking at the volume flow within candles. Now, I'm on an example on Spotify. I can show a really good example on Bitcoin after this, but this is kind of one of my favorite ones just because it really outlines this well. So we have Spotify here. We have this diagonal resistance, and we finally have this attempt at a breakout through diagonal resistance. Same thing here. This is the same chart. This is the raindrop on the left. This is the regular candle on the right. And what you'll notice here is, notice that this candle, right? We intraday have this wick that moved up through resistance. Now, a lot of the time people will say, well, that candle already looks bearish because we closed below it, which I agree. It doesn't look the most bullish, but you can confirm that by looking at the raindrop and seeing where was that volume within the candle. So in this case, you'll see within this wick, and you'll see that, I'm literally pointing to the same candle. It's just the raindrop versus the candle here. Within this wick, there's no volume profile. It's flat. So anytime you see a flat part of the raindrop, it means that there's no volume that took place at that part of the range of the candle. So here, not only do we have this wick, but we also have this flat part here at the top of the raindrop, which tells us that there was no conviction by buyers at the top of the range, because if there was, we would see a volume profile near the top of the range. You'd see kind of a bulge of volume there. So you can use this to confirm, okay, this is an ugly candle, but I want to just make sure that, this is what I'm seeing on the raindrop chart, and if there's anything different. Now, another example of this is on lows. We'll go over an example on Ethereum too that happened like 2 days ago. But lows, same thing, right? You can see here, let me move that back. Same thing, right? We've got this diagonal resistance, and you can use this on anything. You can use it on horizontal resistance. You can use it around moving averages. You can use it around prices poking up above a moving average or an anchored VWAP, whatever. In this case, you can see the opposite happened, right? So lows has the same exact setup here that we just looked at, just on a little bit of a shorter term scale, where you have the wick above resistance, you have the close below resistance. But notice what you have here on lows. Instead of that flat volume profile at the top, you have volume above the resistance line, showing that there are people willing to absorb any selling that was coming on the market. So, a lot of people think, well, is that buying volume? Is it selling volume? There's a seller for every buyer, and there's a buyer for every seller. So we're not looking at, is this buying volume? Is it selling volume? We're looking at conviction by buyers. If there was conviction by buyers up here, which there was, you will see a volume profile form, because we know that for whoever is dumping supply on the market, there is somebody willing to meet that supply and absorb that supply above resistance. And so anytime you have this type of setup where you have a wick, but you have the close below resistance, you need to look at the raindrop to see, is there conviction on the buy side of things? People willing to absorb that supply above resistance? Now, this kind of gets into the supply and demand side of things. A lot of people look at wicks and they immediately think, oh, that wick was created because sellers came in. Not always the case. What happens is, and we know this based on the raindrop, is notice this wick right here. that we have above resistance, this wick is suggesting to us that we had some very aggressive buyers that stepped in and started pushing the price up because there was no supply to meet their demand. So these aggressive buyers pushed the price up, started to absorb supply above resistance. But as soon as those buyers were done buying for the day, and that's what happens a lot of time, you don't see, sometimes you just see these buying sprees come in at one time. And then once that demand is kind of dried up, once those institutions or big retail traders are done buying what they want to buy, the price can drop, not because sellers came in, but simply because those buyers were done buying, and supply and demand goes back into an equilibrium at a lower price because the demand curve shifted back down, meaning quantity demanded started decreasing. And if supply remains constant, the price can drop simply because those buyers are done buying. So the raindrop allows you to see that within a visual standpoint, so you don't have to go into the 2-minute chart and start counting volume bars and counting, okay, this was a big volume bar. Let's connect that to where the price was when that volume bar happened. That's all taking place within this single daily raindrop. So Ethereum's another example if we're going to go on the crypto side of things, where Ethereum a couple days ago had a pretty big wick here. You can see here on the daily chart, we had this wick. Let me go to the actual candle here.
And just to confirm, Jake, the raindrop chart is a type of chart that you created, right? It's not somewhere else that we can find it. This is very important to emphasize on.
Yep, exactly. Yep, that's something that's proprietary to TrendSpider. So it's really allowing you to view volume flow in a new way. So for example, here, right now, Ethereum right now for this current candle is showing that there's some volume at the top of the range. However, we have 7 hours left in the day. A lot can change in 7 hours. So I generally tell people don't really do too much of this type of analysis until the candle has closed. So here, even though this is a red raindrop, I'm more focused on the volume profile. Notice here that we have this wick, but notice within the wick, just like we saw on lows, the previous example, a lot of that volume is within this wick. So anytime you see a discrepancy like that, where you've got the wick, but you have a majority of the volume within that wick, it's important to keep in mind. Same thing down here for Ethereum, right? We had this big wick down here, but notice within the wick, there's not a lot of volume. So we know that move down in Ethereum back in April 22nd was likely a flush on low liquidity. It wasn't necessarily, there was actually some motivated sellers there driving the price down because they have so much supply. It was likely because there was just a thin market below and somebody was able to drop the price on pretty low volume. And you can tell that because there's no volume profile here on this candle right here. So that's a way to really get an idea of, is this backed by volume? Is this move not backed by volume? Was this a flush on low volume? Those types of things you can really see within crypto stocks. It's just a completely new way of looking at the market.
This is great actually, because it's an eye opener. And tell me something. One question I have is, for example, if you analyze the candles, we have patterns, right? Like bullish engulfing or shooting star. Do you have something similar in the raindrop chart?
Yep. So,
because in this case, it seems like it's not just raindrop chart is not just enhancing your trading. It actually you can actually create a trading strategy around it.
Yeah. So let's say that you're still trying to learn what is a balloon, because we call it a balloon breakout, right? It looks like a balloon. So if you wanted to start training your eye, what is a balloon raindrop? It's the weirdest name ever. You can go to patterns. You can just type in literally balloon, click apply, And anytime there's a balloon raindrop, it will show up on the chart. So here, this is a balloon raindrop because you've got a majority of the volume at the top. Notice here, this is kind of your balloon string because there's no volume down here. So you can go back and you can see, anytime there's been a balloon raindrop on Ethereum, which there hasn't been a ton, but you can start seeing anytime you have one, it will show up. This is kind of a classic balloon right here. Now, you generally want to use a balloon raindrop setup when you're either breaking out, kind of similar to what we just did on lows. So here, a balloon raindrop right at resistance isn't going to do a ton for you. You really want to see that volume and that conviction by buyers above resistance, not at resistance. So that's something to also keep in mind. You want to use these really when you have a discrepancy with the wick and the volume, or if you're breaking out. Back to the market real quick, the Qs were a really interesting example of this as well. So if you look at the Qs, there we go. Yeah, if you look at the Qs here, this was definitely a red flag. Now, why was it a red flag? Well, if we go back, you'll see here that we had this wick last week. So I'm just going to point at it with an arrow and highlighted orange. So we had this wick on the Qs, which generally people look at and they're like, oh, that's a wick. It shows that buyers stepped in after. Well, then you look at the raindrop and look what we have. Pretty much the opposite of what we just talked about on the breakouts and the volume in the wick. You have the opposite here where you have a lot of volume taking place within this wick. So as we talked about on Ethereum, if you have a wick, but there's not a lot of volume, that's a pretty good sign that, this could be a low volume flush. In this case, we knew that this sell-off was backed by volume. And so that is a really strong way to see, is this move backed by volume or not? And it's just, it's something that you could go and scan for too. So let's say that you want to scan Binance, right? So you go to crypto lists, you just type in Binance. You can do Binance US all spot symbols, and you can go in and you can simply search condition, daily, candlestick pattern, and just type in balloon here. And you could scan either balloon setups on the raindrop that happened yesterday, or if you want to search for balloon raindrops that are currently forming, I wouldn't really recommend that yet because there's 7 hours left in the crypto market day. But if you wanted to start searching for, let's say, balloon raindrops into the last 2 hours of the day, because at that point, most of the day has passed. You're not going to see a lot of that volume profile change in the candle. You just click current candle and you can scan for any balloon raindrops that are forming. Now on the crypto markets and in the stock market today, you're probably not going to see a lot of that. We're seeing some sell-offs here. But on a strong day or a stable day, you can really find some interesting setups here using this scanner looking for these patterns. If you wanted to go and search for, let's say, a bullish engulfing candle on, let's say, instead of a balloon raindrop, you just want to look for, just type in engulfing and engulfing bullish will pop up. Scan that, and you'll probably not find any right now because the market's kind of crap. But if you go to bearish engulfing, let's scan Binance and see if there's any bearish engulfing. Well, there's a ton. Litecoin is bearish engulfing right now. So you can quickly go in and see these candles while they're still forming. So that kind of gives you an edge because everybody else wants to scan for these, after the fact, where you can go in and you can say, okay, well, with 7 hours left, Litecoin is forming a bearish engulfing candle. Maybe I want to keep an eye on this for a possible move to the downside further if this closes as a bearish engulfing candle. So just a really cool way that you can use the scanner on patterns, but also raindrop patterns as well.
Yeah, I just want to emphasize how much of a time saver this scanner. Okay, imagine. Okay, if you want to look for like a bullish engulfing candle, right? If you don't have the scanner, if all you have is like a regular chart, what do you have to do? You have to have your watch list of charts you're interested in. You go chart by chart, look at the chart, and hope you had enough coffee that day that you don't misread the chart.
Exactly.
Oh my God, how much time do you waste? And with TrendSpider, it's a click.
Well, exactly to your point. Not only do you have to go search through, so let's do it. We can just do it right now. I mean, go to Binance US spot symbols. I'm going to literally have to go through each one and see, okay, and not only that, but then I'm going to have to go in and make sure that, okay, is this a bullish engulfing candle or is it not? I'm going to have to use like my human eyes to do that, where it's already coded in the back end. The computer already has it programmed in exactly what a bearish engulfing candle is. So you can do that immediately. You don't have to second guess yourself. The system's already programmed that in. You know it's a bearish engulfing candle. So not only are you saving time going through a watch list, but you're also saving time questioning, is that really a bearish engulfing candle? And then having to go like squint your eyes and see, okay, that's barely a bearish engulfing candle. It's just an absolute pain. It's inefficient. And it just takes time away from, you know, what you could be doing from a trade, or just not having to do anything at all. So it's very efficient. And that's the whole point of the platform, is to make things more efficient, to make things less biased, to keep things consistent. So a lot of different things on the platform that really kind of turn you into a computer almost. So you're not allowing your human kind of characteristics, which everybody has, get in the way of something that is very process oriented and very, you know, something that can't include bias. Because if you include bias, then you're just really setting yourself up for disaster. Now, just quickly, same thing here, right? We've got this wick on XLM back in the same thing, April 22nd. But notice here, there's not a lot of volume backing that at the bottom of the range. So that was a good example of, okay, there's not a lot of volume near the lows here. So this is probably a low volume flush that happened. So a ton of different things you can try on the platform. It's not just raindrops. It's not just the scanner. You know, it's a full technical analysis and fundamental tool for crypto, stocks, and Forex.
Do we have time to could you show us one of the things I love about TrendSpider, right? You can you can have like a strategy, like a theory of a strategy that might work. And then instead of like having to manually backtest, you have a backtester, right? And you can just input with some clicks. You don't even have to code it. You just put in whatever let's say you want like a moving average crossover. You want to see how well it performs on this particular asset. You can do that, set it up, and then just have it tell you the win rate in a few seconds.
Exactly. So this is one thing I find pretty cool. Yes, you can do anything. You can do moving average crosses, anything. One thing that I found, and this is kind of what kept me bullish on Bitcoin after this huge run, what you could do is you can go in and you can pretty much say, how has Bitcoin performed after 5 green months in a row? Because a lot of people see 5 green months in a row and they're like, this has got to be overextended. But then if you go in and you just type in, monthly, that's your entry condition, 5 green candles in a row. What's the return after 12 months? You can go in and let me just reset this. You just click test and this information will pop up immediately. You'll be able to see there's 4 positions analyzed over 7 years of data on Kraken. You can see the mean trade return is 106%. But the most important thing here is you can see, and this is really important, does my strategy even beat buy and hold? Because it says performance chart, right? It says 676.93% versus 7,000%. Now, this is important, especially for people who are trading leverage. Sure, if you're just trading the spot price, you're going to be up 676% if you traded these 5 green candles in a row perfectly and sold after 12 months. However, if you use leverage, you could easily beat that 7,000% spot gain over the same amount of time. But if you were just trading spot, you'd be up 676%, or you could have just forgot about Bitcoin over the last 7 years and been up 7,000%. So this will tell you, is my strategy even beating buy and hold? Because if it's not, what's the point? Especially with crypto, you're dealing with fees, you're dealing with time. So this allows you to go in and see, is this something that has an edge? So for me, I saw it on the chart and I'm like, all right, well, every time this has happened over the last 7 years, there's a pretty big move continued to the upside. And so that's why I kind of stayed bullish on Bitcoin because of this back test. I ran it like a few months ago. So now we're at 1, 2, 3, 4, 5, 6 At this point, we had just closed, I think, the 5th month green. And what's really interesting about this, you can also see what's called the Price Explorer. So the Price Explorer, if anyone's kind of a weather nerd like me, and they're familiar with how hurricanes are forecasted, let's say there's a random hurricane in the middle of the ocean. Generally, if the Weather Channel or whatever is showing a forecast for a hurricane, they're kind of showing where the last time a hurricane is formed in this area, where those hurricanes have gone. And this Price Explorer is taking all of these recent back tests and it's painting it out on the chart. And why are we entering here? Well, we're entering because this was after 5 months. You can't enter at the 5 month close. You have to enter at the open at the next candle. So that's why we're entering here. And you can see, relatively speaking, if we were to have the the average return here, this is what the price of Bitcoin will look like over the next 12 months on average. So you can see if this plays out, Bitcoin will be at about $150,000 in a year if this back test plays out on average after the last time 5 green months in a row formed. So it's a really powerful tool. You can use, let's say that you've got lower indicators you're using. Maybe you're pairing the MACD, RSI, and something else, or maybe you're pairing all of those things with 50-200 cross. You can put those in, and as you mentioned, you don't have to code anything. You just have to know what the condition is. So you just simply go add parameter, condition, indicator, MACD crossed up through the other indicator, which is the MACD signal. And there you go. You're back testing a MACD cross. No coding, no scripting, none of that. It's simply Boolean algebra and Boolean conditional criteria that you're creating.
I love it. It's such a time saver, and yeah. So don't forget to go try it out. They have a free trial. Sign up at thebirbnest.com/TrendSpider. Use the special code here. I think we're nearing the end of our time. So thank you very much, Jake, for showing us TrendSpider. We're literally showing us how to make it rain with these awesome tools.
Yeah. No, we appreciate you guys letting us come on and talk about this stuff. What I really wanted to focus on was case studies and how this, is useful, not just go through a boring demo. So hopefully this presentation was helpful in understanding some different ways that you can use the platform through these case studies. And yes, TCB 30 is good for 30% off any TrendSpider plan, single month or single year. Great to meet you guys. Thank you everybody for your time watching, and we'll see you next time.
Thank you, Jake. Take care.
Thank you. Bye.
Bye-bye.